time and time again, all we hear is that there's a lack of capacity. I want to build now. I don't want to wait until 2032. Do you have a powered LAN for me now? Do you have GPUs for me now? Do you have capacity for me today? And so I'm very bullish that as long as we can finance the digital revolution in the way that we hope we can, there's no bottleneck that will stop data center development. My name is Wayne Nelms. I work at Ornn, and I'm the CTO co-founder. I graduated from MIT in December of 2025. Then I was working as a trader for a little bit, and then I quit my job and started a business with my best friend from school. His name's Kush Bavaria. We both went to MIT together. And then since that time, we've developed a team. As more companies spend more on AI infrastructure, hundreds of billions of dollars deploying GPUs, there's a need to hedge risk. There's so much risk in the space. Is there too much supply of hardware? Is there an undersupply? And historically speaking, in all investments, in all resource markets, there's been an exchange of goods for dollars, thinking about future demand, future supply. And what we decided is that right now in AI infrastructure specifically for compute, there's just not enough hedging mechanism. So what we developed is a index. It's a number that moves up and down every day. It's listed on Bloomberg today. It's like the S&P 500, but for compute. And what you can do is you can log into our platform and buy compute futures or sell compute futures. And so our early clients are these data center operators that are looking to hedge, right? If compute costs drop too much, they go underwater. So they sell futures. And then enterprises, where if compute costs rise too much, they pay a lot in costs. So they want to put a ceiling. So they buy futures. We see ourselves as the next ICE or CME, but for compute. We're measuring dollar per GPU hour. So we have an H100 index, H200 index, etc. And we get this data from trusted partners, brokers, spot exchanges in the marketplace. It's called Ornn Compute Index. It's listed on Bloomberg under OCPI. I don't want to say anything necessarily about future trends, but I will say in the past year and a half or so, which we have data for, it's largely fallen over time. The slope is negative. However, there's so many factors that go into what the current price of compute is. Obviously supply and demand, but things like power costs, geopolitical tensions. We've seen a lot with China news and NVIDIA and Jensen, right? All these things really impact prices of compute. We really want to make this a known number where you can always look it up if you're curious, see how it's changed in the past, and allow financial products to be built on top of it. We're trying to hedge specifically the tail risk. So the risk of demise, the risk of failure, right, as a business. A lot of these data center operators pay significantly more to hedge that exposure because their lenders are telling them to do so. Right? As a lender, I'm worried about how my investment is doing. And so I'm very concerned with the financial stability of my investments. And I encourage this sort of behavior for proper risk mitigation and risk management. I think one more interesting thing that we do as a business is we build residual value products for the GPU itself. So we will say, hey, you own 10 H100 servers. I promise that in 3 years, I will buy them from you for 30% of the cost you paid. So think about how that makes your lender feel. I'm very happy now. It doesn't depreciate to zero. It's not a 6-year depreciation schedule. I know that Ornn will buy them from you in 3 years for this price. So I give you a better loan, better debt financing costs. And so what we see ourselves as is a financial risk reallocator, a way for you to take risk off your own balance sheet and push them to a financial firm that is happy holding that risk. The largest thing is supply chain constraints. Korea or Taiwan can't satisfy silicon demand, wafer demand, DRAM. Those things have very, very strong impacts. I think the largest historical move we saw was when H200s were, according to Trump, not allowed to be shipped to China. Saw a huge jump in H200 pricing in the US because there's a lack of supply, right? So I think it's very cool to see from our seat, our index reacts before the headline. And so for asset managers, for hedge funds, for people that trade in the financial markets, we are an alternative data source as well. The thing I like looking at the most, maybe this makes me a nerd, So I like reading the annual reports for these hyperscalers. What are they doing to help support the ecosystem, to support their investments? These are deploying unheard amounts of money into this space. Google recently started doing this thing called a credit derivative. What is a credit derivative? You can read it. We wrote a blog about it. But what they're doing is they're backstopping a lot of these projects. They started just last quarter, and I really want to see how this number evolves over time. I think right now it's 16.9 billion. Small for Google. It's likely going to grow. And I want to see how that number changes, along with the numbers for other hyperscalers as well. I think we've had the opportunity, even though our company's fairly young, to talk to so many powerful and influential people in the space. And time again, all we hear is that there's a lack of capacity. I want to build now. I don't want to wait until 2032. Do you have an energy? Do you have a powered LAN for me now? Do you have GPUs for me now? Do you have capacity for me today? And I think that's the one thing that's made me most bullish, is that companies like OpenAI and Anthropic will do nothing until they can get that capacity in their books and in their hands. And so I'm very bullish that as long as we can finance the digital revolution in the way that we hope we can, there's no bottleneck that will stop data center development in the United States or abroad.